And welcome out to Tackle Trading's halftime report here, 12/4/2018, Matt, and the market is now selling again. The news headlines, they always kind of go back and forth. And I saw the funniest headline over at briefing.com, which is a site I've read for years and years and years and years. And you tell me how you would react to this. It says, general concerns about the ability of the U.S. and China to being able to settle their major trade differences. I guess that explains it all here today.
Well, it's what we talked about yesterday a little bit. I'm a little surprised that it only the G20 euphoria really only lasted for about 12 hours overnight on Sunday. I certainly thought it would take a little bit longer for the market to be like, hey, listen, this we might not believe that they might actually come to some type of consensus. I thought the market would be a little bit more bullish, but it ran into some resistance, failed to break resistance, came back down. Obviously, all the headlines today are about, they don't believe that they're going to be able to come to an agreement in that 90-day window, and it's certainly I'm concerned with. And it's not about the numbers, Tim. It really isn't. It's not about the numbers between Trump and China and the amount of tariffs versus non-tariffs. What the U.S. really wants is IP protection. Right? We want China to stop trying to steal our intellectual property through buying U.S.-based companies and mergers and forcing IP integration and so on and so forth. So a lot of these trade tariff discussions get the headlines just because of the numbers of how much we put tariffs on their imports versus how much they do on our exports. So, but a lot of it is really about IP protection. So I don't know if they're going to come to an agreement there, to be quite frank with you. And I think that's what the market kind of thinks as well. I'm just a little surprised it only took one day, to be honest with you. I thought we were going to see a little more follow through.
Before we break down the chart, we're talking about risk on, risk off. Go to a heat map over on the skyline on Tackle Trading, if you would. I think it's a really easy lesson to teach today about the idea of money going into conservative stocks and out of aggressive stocks. And we talk about rotation all the time, Matt. The heat map is glaringly red in some areas, but there are a few green highlights here.
Well, and those highlights are all stocks that we have talked about over the course of the last, month, 2 months. But Tim, if you'll remember, just yesterday we had this whole risk on, risk on, risk on. Correct? I mean, that's what was everywhere in the news. Risk on, appetite for risk, appetite for risk, appetite for risk. International markets going up, Chinese markets going up, emerging markets going up, U.S. markets gapping up 2%, tech gapping up 2%, Apple up 4%, Amazon up 4%, Johnson & Johnson, Coca-Cola, Verizon, Procter & Gamble, all of them down, utilities. It's just. So it lasted, that sector rotation literally lasted one day until, we're like, oh, wait, maybe a 90-day delay in tariffs don't actually fix the problem. Again, little surprised that it only took one day to kind of map out. But Tim, the euphoria that came out of the G20 coming back into it, that Santa Claus rally coming back into it, that did not last very long. It literally lasted one day. And now we're right back. And this is what the market does. We know this. They have an economic event. They have a summit. They have a Fed policy announcement. And then they immediately move on to the next economic situation. So it's not that shocking, but it is a little surprising that the euphoria of the G20 did not last that long.
Correct. I mean, well, nothing would surprise me in this market. If you go back to the chart, Matt, one thing you said in pre-production that I thought was very, very smart was the fact that support and resistance are simply playing out very, very strong. If you look at the market right now, it's incredible. We talk about the unpredictability, and it feels that way day over day over day. I get it. And I know it's been volatile and crazy, and it's been a difficult market. But if you step back, Matt, and you look at the forest for the trees, support and resistance, okay? Mm-hmm. You have 26.25, and we even said it yesterday. If it doesn't break 28.20, then there's no breakout. It's not bullish. We were more neutral with the upward movement, cautious, now confirmed neutral. I don't think you can go bearish completely. Now, I've been more bearish than most, but I think that the rational, most logical way to assess this is a neutral chart in the short term, right? Day over day, we're bearish with the sell-off, but resistance held, support is down at 26.25. We're in a range. What do you think?
Well, it's when you look at the headlines, it changes so much every single day. But the simple reality that over the last month and a half, this market has maintained neutrality, going up to resistance between 2,800 and 2,820, down to support right around 26.25. And it's a very clear chart, to be perfectly honest with you. You have Boom, coming back down, support, coming up, resistance. So when you look at this chart here, that is actually a very, very clean chart. A lot of noise in the middle of these ranges with all those moving averages. But quite frankly, when you're in neutrality, moving averages don't matter that much. Would you agree with that?
It's all soup. It's all noise. In fact, they cross over each other quite a bit. The signals become less and less significant. And sometimes what you have to do is you have to pull it back. I always keep a chart naked, Matt, where there is no moving average on it. And then I will bounce from moving averages to non-moving averages so that I can assess the levels in a kind of a cleaner way. I love the 9, the 20, the 50, and the 200, like every trader, that was trained the way that we were. But right now, those moving averages are not giving me a lot of signals. We bounced above the 200 and the 20, Matt, and it came right back now underneath it. Now, yes, it is hitting that red moving average right there. Am I going to assume that's going to be major support? No, not even close. In fact, we're just in the middle of this range here. Intraday, we are at a support location, okay? There was a mini pivot late or mid-November. You can kind of see that 2 green candles. I wouldn't call it a pivot, but it is stalling at that location. Break me down into a 15 or a 30-minute chart, and let's take a look at that real quick. A lot of this selling happened in the last half hour. Literally, as we were talking and prepping the halftime report, the market started selling, and Cody was saying, "What's going on? I can't find the news. What's going on? I can't find the news." Market broke support. We instantly sold down. Now 2720 is support here on the intraday. Bouncing off of that, I think we're going to get a lot of volatility from now till the close as well. Could be a little bear rally, could be a further breakdown. If you break below 2720, I think you got another % to the downside.
No, easy. Yeah, easy. 20 points to 2,700. There's no doubt about that. You break 2720 on the intraday, yeah, you're another % down to 2,700.
Yeah, I would agree with that. S&P 500 is the first one we always look at. We're down 2% here today, guys. That upward rally, that big bromance between President Xi and President Trump did not exactly work out. Matt, I saw a tweet that you and Cody showed me from President Trump labeling himself as tariff.
I am tariff man.
I am.
Watch me put on more tariffs. Who labels themselves tariff man? Okay, that was funny though. I had a very, very, very long and hearty laugh at labeling himself tariff man. No doubt about that. But I'd like to give credit to Trump for the sell-off intraday, but that wasn't it. Tariff man came out 3 hours ago. So a lot. I think you're right, Tim. If you look at the chart here on the intraday perspective on the 15-minute chart, here's the gap on the opening of the futures market with the G20. Here's the slowing momentum as it approaches that 2820. Once you broke down intraday here, you come down and look what happens. You fill this gap. So you fill the G20 gap early on the overnight last night. Overnight just hung out. And then once the market opens up right here, you see an initial selling. Once you fill the gap, once you close under that intraday support level, everybody's going to capitulate on that one. And that's what you saw. You saw boom, 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 come straight back down into to another support channel around 2725. Now, obviously, the intraday at the low point is around 2721. So yeah, Tim, I expect a lot of volatility for the rest of the day, and quite frankly, I think it's going to go up and then down. But and that's just pure trend and patterns and so on and so forth. But you should see a lot of volatility. But I want to bring it back to the daily chart, Tim. How many headlines, both positive and negative, have we seen over the last month and a half? I was telling Cody, it reminded me of the old Karate Kid scene with Master Miyagi, where he says, wax on, wax off, tariff on, tariff off, right? Risk on, risk off type situation.
Mm-hmm.
We've seen a lot of headlines. It's been very difficult to get a good understanding of where this market really kind of wants to go in the short term versus the long term. Just given the fact that we've had a gluttony of different headlines that give us different points of view and so on and so forth. But I do want to point one simple thing out. Trends are trends, patterns are patterns, and support is support, and resistance is resistance. Support and resistance in this environment have been very, very, very consistent, extremely consistent, even more consistent than the W pattern we saw in last February, where you had volatility in February and March, even more consistent than some of the other drops that we saw in 2015 and 2014, 2012, 2011, and so on and so forth. This support resistance level right here is absolutely key. I mean, when I put out that G20 report on Sunday night, Tim, when I put out the tweet and whatnot, I basically said, okay, everything's great. Everything's euphoric right now, but 2820 still is there, right?
Yeah.
2020 is still there. It's got to break that level before you can call this bullish. I get that a lot of people want to just read the headline on a daily basis and they're like, oh, market's up 2%. We must be going great. Market's up another, 2%. We must, everything is euphoric. Everything is great. Market's up 1%. No, fantastic. Market euphoric on G20, fantastic. Oh, wait, nobody looks at the resistance level of 2820 and all of a sudden it holds. So it's still, it's difficult for traders, but you got to be patient in this environment. Don't chase. Let the pattern set up, wait for the pattern to break, and until 2625 is broken or until 2820 is broken, this market is neutral, and I don't care what any other pundit, any other talking head, or any other trader states. Anybody who claims anything else before those levels are broken is just trying to capture headlines, Tim. This is neutrality, and anything goes in neutrality. Wait for it.
Potentially they're heavily opinionated, which can be dangerous in markets. When you allow your opinion, it can be worse. Yeah. You might think you know what should happen based on your own political or world views. You got to get that out of your head when you're a trader. You have to trade what you see. You don't trade on hope. You don't trade on your beliefs. You trade on what you see in the markets. And right now the market is neutral. It still is a beautiful W pattern, by the way. One of the most clear W patterns I've ever seen. It just has failed to break resistance yet. Right. And now we are selling back down here, Matt. The advanced decline line on the S&P, we got 430 companies down, about 70 companies up. That is worsening as I'm watching it. It's not going good here today, obviously. Bear day in the market. There's quite a few stocks in the news today. AutoZone up 5%, Newmont Mining up 2%. In fact, give me NEM if you would. Mining stocks are an interesting idea right now. There's quite a few that I like. Gold, and we'll get to the metals market here in just a minute. NEM, one of the top gainers on the S&P here today. When you have a mining stock breaking back up off of a downtrend, Matt, that's going to be interesting here. Is that a tradable breakout right there?
Yeah, of course it is.
Yeah. I like gold right now.
I'd probably wait till it breaks 34.
Mm-hmm.
If you're not in it. But yeah, I like Newmont. And plus, I like Newmont, the company.
I do too. Yeah, watch list some of these mining stocks. I think they're going to grab
one of the bigger market cap companies for mining is Newmont.
United Rentals, Dollar General, UPS all down. In fact, give me UPS. Shipping companies, usually this time of year, they get a seasonal bump because of the holidays, Matt. That's selling like crazy. A break below 105 is a failure at support, obviously, but that's a huge red candle here.
7% downward movement on a company like UPS is a major, major, major issue.
Yeah, I'm looking at this. No earnings.
On the other ones, they were all earnings plays.
UPS and FedEx stocks. Give me FedEx as well. Looks like they're both moving at the same time.
This is news related. I haven't seen the news yet. I don't trade either one of these companies, but yeah, this is obviously news related somehow.
UPS and FedEx stocks dropped to pace transport's losers after Morgan Stanley highlights Amazon air risk. So,
Amazon's 2-hour delivery that might impact UPS.
Oh my. Yeah, I'm looking at the news headlines as well. Obviously, shippers are down here today. They're two of the top losers as we're looking at the market. Applied Materials and AMD, the chip makers, are also getting beat up. When the market's going up, stocks like that are going to look great. When the market comes back, they're going to come back. I still like AMAT here on a reversal pattern, Matt. I know that's an ugly candle, 7%. Nothing to shy from, but I mean, it is a W and a reversal. I still like that pattern, unless, as long as it holds this new pivot high and pivot low.
Yeah, you can't do anything on a day like today.
Mm-hmm. Let's move on to the Dow Jones Industrial. Talk large caps here for a minute. A little bit more relativity in that one. And by the way, welcome out halftime crew. See some of our regulars out here. Adi, Chris, great to see you guys. Frank, always Coach Frank, great to have you. David DeMaio asked for a review of GameStop. We'll get to the gaming companies here in just a minute, David. Let's work on Dow 30 stocks here, Matt. In fact, why don't you break down? Yeah, I see you got GameStop up right now. Go ahead and give us an analysis of that chart, if you would.
On Blockbuster.
Mm-hmm.
That's my analysis.
You think so?
Yeah, I do.
I mean, Blockbuster had a different business model. I do know that people still go down to GameStop to buy the controllers and whatnot, but essentially, eventually, they're going to just buy them online, right? Get them shipped directly. Same thing we were just talking about with Amazon, but I don't know.
I'd rather go to a resale shop that actually gives you better value than GameStop, personally. Like, I'll go to my local game exchange place and buy from there than I will GameStop. Because the game exchange, I can get a used controller for $15, $20. GameStop's gonna be like, oh, the same used controller, $45.
Yeah, I was out on GameStop. I think 2.5, 3 years ago. I just don't see a fundamental reason to own this company.
You know, the gaming companies have all been under pressure. Activision, Take-Two, GME. We've been looking at bear plays on a lot of these for quite some time. You know, we even had one on the scouting report. Cody, what was the one we put on the stock report this week?
It was EA.
Yeah, Electronic Arts.
We put EA, and
that was a beautiful cut. Yep. That's a clean chart right there. See, GameStop has gapping personality and a lot of differences to it. If I'm looking for something to trade, I'm probably looking at more like an EA where there's a very clear bear retracement and pivot.
Yeah, as a short-term trader, there's no way you're trading GameStop. It's too volatile, it's too random, it's too crazy. It's got gapping personality. Random volatility, news driven, no consistency in any capacity. Short-term traders should stay away from this right now. Long-term investors on GameStop, again, this is just me speaking specifically, but GameStop was on the tackle 25 in 2015, and it was or 2016, I can't remember which year we pulled it off. But it was an easy company to pull off. Fundamentally, it's a weak fundamental company in my opinion, but looking into the future, GameStop is one of those companies that I believe has failed to adapt to the ever-changing online model. You don't need to go to GameStop to buy a game in any capacity.
Hey, Matt, I have a gift for you. It's in the chat. Grab that link.
Oh, is this?
This is what was requested.
Oh, I requested Cody to give me a gift. Risk on.
Mr. Miyagi. Didn't they come out with a new Karate Kid that like streams on YouTube?
They came out with one with Will Smith's son, Jaden Smith.
That was a couple years ago. I don't know, but Cody, get that on Twitter if you don't mind. That was
Will do.
Awesome.
Very, very good.
Yeah, GameStop. We're done analyzing GameStop. There's no reason to look at this company any longer.
Gap down, gap fill. Obviously, in a downtrend. Fundamentally, they've got problems. I agree with that. Let's move on to the Dow Jones. Some of the large cap companies, if we could. Dow Jones down 2% here today, Matt. There's only 5 companies going up, and you could probably guess them, but I'll just nail them out here. Johnson & Johnson, Procter & Gamble, Coca-Cola, McDonald's, and Verizon. Staples, conservative.
That's the 5 right there.
Yeah, those are the 5. I like the Dow still ranked as a number 1 because it had relative strength, and you do have some conservative nature to using mega companies, blue chip type of companies. But that's a 2% down day. We're above the moving average soup, but it still is moving average soup. What's your read on the Dow here?
Same thing.
Yeah. It's top losers today. There are actually quite a few components getting beat up here pretty badly. Caterpillar, Matt, down 5%. Give me a chart on Cat. Yeah. It looked like it wanted to run. It really did. It looked, we put in a higher pivot low, higher pivot high, developing into some kind of a trend here. But now after that gap out, Matt, we've come from 145 down to 131. Literally since the opening price on Monday, we're down 14 points. We're down 10%. Industrials are taking it right on the chin. These aggressive international growth type companies that are dependent on the global economy, they're obviously getting beat up. Cat leading the way here.
Keep an eye on 130 on Caterpillar, though.
Yeah.
Keep an eye on 130. You could certainly hold 130. You could certainly doji, upward moving in price. So keep an eye on 130. Technically, you still have a higher high here on the short term. So if you look at this short term analysis right there, higher high, higher low, higher high, Still look at that. So yeah, it's ugly. It's ugly there, no doubt about that. But keep an eye on how Caterpillar's going to respond at 130.
Currently, Apple is the largest company in the world, but if they have any more days like today, they might lose that to Amazon or Microsoft at some point.
I think Interday, Amazon retook it yesterday. Interday briefly. I think between Microsoft, Apple, and Amazon, they're like separated by about 2-3 billion based on what their stocks are doing on that daily basis.
Bearish retracement, red candle here, obviously a downtrend. When the biggest, and for some people believe the best company in the world in many regards, is getting crushed in this marketplace, Matt, obviously it's in a downtrend and bearish. Holding on to this without protection, you're just hoping at this point. There's nothing really there that shows me any upward expectation.
No, no. We talked about it yesterday in depth on all of these. No, it will take weeks for this to slow down, and this market's not V-shaping back up, Tim. I don't know what else I have to say besides say it every single day, right? So no, I mean, a gap up on Apple yesterday on the G20, and I said it yesterday. There's not a buy signal there. There's not a buy signal in any capacity on Facebook, on Netflix, on Apple. And specifically, like I said yesterday, that I don't look to short Apple, but Facebook and Netflix, both of them are triggering in today.
Yeah, for sure. In fact, why don't we go on to tech and the NASDAQ here, if you would, NQ, and let's break that chart down. It's the most bearish of all the indexes. Potentially the Russell could become that at some point. Today, obviously, the RUT is getting it, handed to them. There's no doubt about it. But you had lower pivot low, lower pivot high, lower pivot low, lower pivot high on this NASDAQ here, selling off of resistance, selling off of a pivot point. We're down 2.3% here. Intraday, Matt, you've got a key location here. It's the same kind of little mini pattern here. There were two green candles in mid-November, and I think that formed as some location of the resistance and support point on the intraday. We're now trading right down to that. What is it, 68.80 or so that we're holding here today? What's your expectation for the NASDAQ?
Down.
It looks down. Looks ugly.
Yeah, most of the charts look even uglier than the index does.
Yeah, AMAT, American Airlines, Micron, all down 5, 6, 7%. Western Digital, give me WDC, one that's been on our option report many, many times. This is the value of getting those weekend reports, by the way, is that we keep pointing out and highlighting these different opportunities when they come up. Matt, a break below support here at 40.58. That is a new trigger point for traders. I know we're still 3 points away from that, but that stock is a screamer.
Well, you're still 2.5 points away from that, but you also have a trigger potentially at 42.50 on this one too, Western Digital. You have a little bit of an M formation, W formation forming there, so that would be an intraday entry onto that as well. But the better trigger would be a break of 40.50.
Yeah.
On WDC. WDC has been one of those ones on the reports that have been so good this year.
Consistent.
Yeah, sure. So good this year.
Yeah, I'm looking at your sectors over here. There's only one sector up today, and that's utilities. Whenever you're looking at the market, it doesn't matter if it's 2018 or 1918. If there's only one sector up and it's utilities, that tells you a lot about the marketplace. That's right.
That's all you need to know. If utilities are up, everything else is down. But Tim, we highlighted the utility play yesterday. We highlighted it over in the weekend with the scoreboard. Also in the stock and options report, we had multiple different utility plays there. Duke Energy, Exelon, some other utility plays there. Utility play is strong right now. It's conservative, and I'll say it again. I feel like sometimes I sound like a broken record here. But you need to be patient, wait for the volatility to subside, lower position sizes, be very particular about the trades you take, make sure they're clean setups, don't chase the dragon in any single capacity, be very conservative while the volatility and the world markets play itself out. This is going to take some time to shake out.
One thing that I keep seeing in the news today, and it's popping its head back in, is the inverted yield curve. Everybody's talking about how the bond market is compressing. Give me a TLT, if you would, one of the bond products that I like to take a look at. You can always get the 2 and the 10-year, but if you're looking at the 20-year bond here, it's going up. Yields are coming down. The curve is tightening, Matt. In fact, I was looking at a thing on Guru Focus. I'll give you the link in our chat here. It's kind of cool, actually. And Cody, let's see, Cody. There we are. Click that link in the chat that I just sent you in Zoom, and let's go to Guru Focus. When you're looking at the bond market and it starts to compress, That yield curve is something that you'll hear every news anchor talk about. You'll hear every article and every wrap up will point to this bond yield curve. Last time we inverted, Matt, you can see that chart right there, the historical 10-year, 1-year spread, the historical 10-year, 2-year spread.
This is the more important one.
Yeah. We've not dipped below that red line since the last recession.
No, that's what it means to invert when the 2-year is getting paid more than the 10-year, right? So basically that's a measurement of risk, that people are rushing into the bond market, leaving the riskier assets like the stock market. And when the 10 versus the 2 inverts, that's a sign of negativity to the economy for the future. It's an indicator for a recession in the future is what it is.
Mm-hmm. Yeah. Yeah. I mean, here's the reality. You're going to hear that in the news quite a bit. And as that tightens, investors are going to start taking different action.
Tim, it's the lowest since mid-07.
We are definitely risk on today, Matt. I love that risk on, risk off gift that Cody had Cody do. We are risk on. You're seeing it in the bond market. You're seeing it in the stock market. You're seeing it mostly in aggressive areas, including small cap stocks. Go take a look at the RTY, if you would, and talk a little bit about that small cap. I mean, man, I got to tell you, I watch this thing intraday and I watch it every day, just like all the other indexes. And it just took it right on the chin. We're down 3.1% here today, Matt. That is by far the leader in the clubhouse to the bear side. It broke support and just took off, just absolutely took off. Yeah. Fighting 1500 here. But what does it tell you about the rut?
It's extremely, extremely weak right now. You can't really chase it as it's went this far already, Tim. You got major support at 1500. You also have major support at 1490. So if you're looking at the zone of support on the intraday here, you're looking at anywhere from 1500 to right down here at 1490. And then if you break that level, it's clear selling down to 1450. Don't think it's going to happen today, but keep an eye on it. There's some great day trading opportunities as those markets break support levels.
Yeah, I would agree with that. I mean, there's no doubt, and there already has been all throughout the day. In fact, quite a few opportunities popped up this morning for me, and that volatility is why you run your daily routine. RTY fighting 1500 here. You have to respect the fact that it has support at 1450. We're now in the middle of that range, but I'm still bearish. I've been bearish on this one for a while in some regards. Yeah.
Well, what did I say yesterday? Sell, bear call.
Yeah.
That's what I said yesterday.
Yeah, I did. So, yeah, I did. In fact, a lot of people trade that cash flow condor system, Matt. I have a window where I'm willing to operate in, and I was using the February contracts this week, because I already have the January contracts on. If you're a pro member of Tackle Trading, come join us next Wednesday. I'll be teaching the mastermind group on cash flow condors, from Coach Tyler and whatnot. And that's always a great system. I love cash flow.
That's also the time you're going to start assessing what strikes to sell in February.
Mm-hmm. That's right.
January's already sold, right? You should be looking at strikes in February now for cash flow condors.
Yeah, I agree with that. All kinds of stuff going on across the market, Matt. The dollar is going to be the next one I want to look at, though, because obviously when you're talking yield curves and currency markets, they all tie together. There's market relationships. It tried to sell and now we're coming back. It's actually hurting some of my gold expectations for a breakout. We'll get to the commodity stuff here in just a minute. What do you read into this dollar movement today?
This was all Brexit related. Initially in the morning, Brexit had some positive news coming over through the overnight. Obviously most people in the U.S. were sleeping. But as all things Brexit goes, that simmered down real quickly here. So it was a positive Brexit, then some negative Brexit. That's really what kind of drove the volatility. Keep an eye on 127 on the British pound. It tested under that level today. A test is not a trigger. For a major support level to be broken, you can't just place an order underneath support and be like, oh, just let me get into it when it goes under support. No, I need to see a close coming under support.
Mm-hmm. I don't know everything about the politics in the UK. I do know this is that Prime Minister May is not exactly moving in a positive direction. She's in a downtrend right now.
She's bearish right now.
She is GE right now. Yeah. So it is. She's definitely been not exactly getting wind.
Trump is tariff man. What would we call Theresa May?
Ooh,
we got to think of something. If Trump's tariff man, right? Self-proclaimed tariff man, by the way.
Yeah.
Tariff man.
Well, if Trump's a stock, I said this in a pre-production. I think Trump is Tesla. Okay.
Overinflated for true worth.
Well, I mean, at the high of their value, right? At the all-time high of their value, but the most shorted company in the market, and so many people have strong opinions. Trump is Tesla. So
Trump is Elon.
love
Elon
him, right? It is what it is. Yeah.
Love him or hate him, that's what he is. But no, you had a little bit of Brexit news coming. It created a lot of volatility for it. You also had overnight, Tim. You also had on the Australian dollar. If you look at /6A here, not GA /6A. That's the Australian dollar futures. The Australian also reported interest rate policy yesterday that kind of brought that back down into the breakout channel for the Australian dollar. So you did have a little bit of news driving the dollar today, but most of it, overblown. Now it's coming back into neutral.
Yeah. What do you make of the OPEC meetings coming up this week?
I think they're going to cut.
Do you?
I don't think it's going to save oil.
I don't think so either. In fact, what we should probably do is we should go back and analyze all the times that OPEC has come in and cut and see what it did to oil prices. Everybody's under the assumption that news headline is going to make oil go back up. Give me oil if you would. Let's take a look at the commodities one at a time. That you're going to start seeing headlines coming in here. Oil was up here today, Matt, but now we've got a pretty reversal style candle. The tails of those candles are coming in. You have a falling trend, falling moving average. You've got potential triggers setting up here, Matt. It has not triggered yet. And now on a Tuesday afternoon, we're going to be looking at Wednesday and all the inventory numbers, and maybe that pushes you off to wait for a trade and whatnot. But I'm still bearish, very, very bearish on oil. The trend is down. I don't know what the volatility is going to come from these OPEC meetings. I know that throws a wrench in the whole thing. What's your read on oil?
The last 2 days is because of OPEC is expected to cut. If they don't cut, oil could go to $45. So let's not do anything until we see what OPEC does.
Mm-hmm. I'm looking at it right now. Crude oil up 0.4%, natural gas up 3%, UNG, heating oil up 1%, Brent oil up 0.6%. The nat gas one, is it cold outside again? I gotta check.
It was cold today.
Is it cold again?
Is that why? When I woke up, I was a little chilly.
Yeah. Obviously, commodities are going to bounce a little bit when the dollar is settling in, and it was down earlier in the day. Commodities were set up to have a big day, and they have not carried through because that dollar came back, obviously, off the lows, and you're reverting a little bit of that trend there. Crude oil, to me, that's a bear retracement setting up. Give me nat gas real quick. Let's take a peek at that chart. And then on to gold. I want to talk metals for a minute because it looked like it wanted to break out here today. Nat gas still generally bullish, not really tradable until you get a better pattern. If somebody was bullish, I would not fault them, but you would need to have a hedge or a plan in place. And I'd want to, that's true of every trade.
If somebody's bullish doing covered calls on UNG, I got no problem with that.
Yeah.
I'm personally not. I'm waiting for volatility to subside, but I got no problem with that. But if you're if you're selling call options on NG, you're asking to lose all your money.
Yeah, I agree with that.
By the way, I would say the same thing on naked puts on NG right now.
There's not a level I would feel comfortable being naked on options.
Not in the futures market.
Not right now. If I want to take delivery on an ETF or something, that's a different animal. But
it's not that. It's when volatility goes like this, the margin requirement is going to skyrocket.
Yeah, I agree. Yeah,
it's basically the market saying if you want to play, you need to pay to play.
Correct.
Yeah.
Give me gold. Let's look at it. Gold. One of my favorites, one of your favorites, up 0.5% today and breaking out.
Trigger.
Matt, this is absolutely a trigger. There's no question. And you are range up, and this is the kind of breakout that you don't love technically, Matt. I know you love the commodity. You don't love it when it runs into a breakout and then breaks, but this might be a different animal here.
It didn't run, though. It ran, and then it took a nap, and then it ran again. I don't mind that. I don't like V-shaped breakouts after it's already ran 4-5%, right? That's what I don't like. But you kind of high based here a little bit, then you broke out. I see this level right here is very significant. And yeah, you are running. It's 1245. It broke out at 1240. You are running, but I like this play on gold on the breakout of 1240 right here, Tim. Once you broke that, and you see kind of the high base that happened over yesterday in gold, it broke it on the overnight, Tim, and now you're just kind of fading here. But if you look at that daily chart here, you got to love that breakout at 1240. that is significant levels of resistance. That 1240 level was not only resistance over here, support all the way over here. If you look at that weekly chart here, Tim, look what's happening here. You're breaking up above the 200 on the weekly. You're showing good price appreciation. That to me is a swing trade. It's a position trade. It's an investment type decision. I like the reversal we're seeing on gold right now, and the break at 1240 confirms it. I liked it above 1220 when it broke it a month and a half ago. I like it above 1240 as well.
Yeah. One thing that is up here today is cryptocurrency. At least once a week, we got to look at Bitcoin. Give me /BTC if you would. What an ugly, absolutely ugly chart. It's up 2% on a red candle after it just got destroyed here a few weeks ago. We're going to have quite a few discussions on the podcast in a couple of weeks about the year in review over Bitcoin. We're going to leave that rant for now, but
I'm not going to say anything.
Oh my. I did see that it was up today on a day where the market's down. I thought that was interesting. Yeah. And we are at that point here, guys, where we transition and we talk about the topic for the day. And we're going into the fourth quarter a little bit early here. If you're out there in your halftime crew, #halftime crew, we've got 70 people here live and we only got 17 likes. Give me a like. If you're new to our YouTube channel, make sure you subscribe. We do this every day. And that way, if you put the alert bell on as well, it will let you know when we go live and remind you to come in and join us for the halftime report. Tackle trading, this thing we love doing, Matt, coming in, talking markets and whatnot. Before we get into the topic today, I got a small mini rant, okay? If you're out there and you're trading and you are trading without a plan, then get education, period. Do not shortcut this to try to get into the market live. One thing we're doing with the halftime report, Matt, is trying to help people understand how a trader analyzes the market. But you understand as well, and you know this as well as I do, it takes time to get good at this. You can't just rush out and shortcut the market and go out and try to get rich. You will lose your money, okay, period.
No, you'll pay it to the market.
That's right. That's right. And so you need to make sure you go out and get training and education and build a system and have your money management rules.
Okay. And I know where this is coming from. I know kind of the backstory of this rant. And let me just kind of say one thing to it, Tim. I have no empathy for people who at some point in their life has told me that financial education is too expensive. And then when they lose their asses in a bear market, they come back to us whining and crying about it. I have no empathy for that. Zero.
Yeah. Training, guys. I mean, there's a reason why it takes time. I don't think there is a shortcut in life to almost anything that's worth it. You got to put the work in. You got to put the time in. You have to go and put the effort in and actually build something. You have to understand something. I know we break down the markets pretty quickly here, and hopefully you guys are learning. If you love our halftime report, thank you for joining us. Love having you guys out here. Love doing this each and every day at Tackle Trading. We're very, very proud of that. Matt, today is Delta Tuesday. And young Cody, our producer, he had a really good idea. And we said, okay, let's run with it. Cody, you there, young man? You still here with us live?
Absolutely.
All right, set this up.
All right. So this past Friday, I did or I guess Saturday is when I did it, the market skyline or scoreboard. And in the scoreboard, in my video that I made, I talked about some of the sectors that we're setting up, one of which was XLU, utilities. It had a breakout, and I said, now, this is breaking out right here. Now, sometimes utilities will break out and come back down the next day. We'll know on Monday. I said, so if you like this breakout, here's what you do. You take this setup, how it's already doing well, and go look for companies that are doing well within the utility sector. Off of that, on the stock board, I know we had Duke Energy, AEP, and EES, all three of which are utilities. If you were to go look at any of those three companies right now, look what they're doing. So it's just very, very smart to do the top down, like we've always talked about. Start with what the market's doing. It's very tempting to jump right in and be like, okay, let's go look at the reports and see what stock I can jump right into. But if you don't know what the sectors are doing, then it can go the exact opposite. You could end up going a couple of days without ever being triggered in. So the best way to do it is to start with the sectors. The three that were setting up the best this week were utilities to the upside, communications to the downside, and tech to the downside. And how have those done so far? You can just look at it.
I like it. First of all, it's top-down analysis 101. It's part of how we have our discussions. And one thing that I always recommend on the weekend, Matt, when people are going through the content and the reports and everything out there, is you start with the scoreboard newsletter, right? You start with the newsletter and get the big picture analysis on the market, so then you can break down the individual components. Take utilities, for example. Let's rapid fire. Give me XLU for a minute. Let's start with the sector. And obviously bullish. I mean, you can see the green candles. You can see the breakout. It's not a new trigger today, Matt. The trigger would have been on Monday or even Friday of last week. But obviously bullish, correct?
Yeah, it's probably the most bullish sector right now.
Now, I'm looking at 36 companies on my screen that I've scanned for that trade over 1 million shares in volume, that are in the utility sector and are bullish. Now, one of them is AEE. And we'll rapid fire through a few of these. So if you know that you're interested in going long an area, you then can look at individual, and you want me to, I can give you the screener on utilities, or we can go to FinViz direct.
I can just do it.
Yep. And you're doing mid cap plus, over 1 million, optionable, over 10, and sector utilities. So we're starting with an idea, a delta idea. Utilities are bullish. Now we're breaking down to the individual components, and we're going to have to now measure each of these. Now, Matt, a trader's not going to go out and buy 20 utility companies. No. We're going to find the 4 or 5 that we like the best, and then we're going to break them down individually, correct?
Yeah.
Yeah. So when you look at a big picture like this, that's a lot of information. How do you interpret that page?
Oh, I honestly, once you know how to understand trends, patterns, and support resistance, and the triggers that you're looking for, such as breakdown triggers, breakout triggers, retracements, once you understand the patterns, you just go pattern recognition. It's like anything else. If I put a ball in a square, you could be able to tell which one was the ball and which one was the square and how long. Right? If I hold up my cell phone, you can say, hey, Matt's holding up a cell phone, and it doesn't take you very long. Matt's holding up his drink or whatever it is, right? So it's the same thing for traders. So once you know what to look for, it doesn't take you long to kind of see the trend and the pattern and so on and so forth. When you're looking at something like Duke Energy, right? That was on the scouting report. I believe it was on the stock report. I think we had 2 utilities on the stock and one utility on the option report. But when you're looking like a company at like Duke Energy, and you're like, oh man, I wish I would have watched that report on Monday, right? Because that was a really, really good trigger. By the way, we talked about in the halftime report yesterday as well. Now you've already kind of ran here, Tim, and it's like, it's too far above the trigger of $88, $75, $90, whatever it was. So you might not be like, Duke might have already made its run. So if you're looking at something to get into something, you're looking at something that is breaking out, or that is attempting to break out right now. So when I'm looking at this, and I'm just going to write a couple down that kind of catch my eye here, that unlike a Duke Energy or some other ones that have already triggered and already ran a little bit, that are kind of setting up for as replays right now. And so that's all I'm doing right here. So I'm looking at CMS, Tim. I'm looking at DTE as well. That would be DTE. I'm looking at potential NRG play here. Okay. Looking at the next here. Okay. So like OKE, okay, yeah, I don't want to touch that. Oh, PCG. We know what's happening with PCG. Let's move on from that one. A high base breakout on PNW. Take SCG here. I want to put SCG on the scan, not because it's not bullish. It is really, really bullish, one of the best performing ones out there, but it's already made a significant movement, and I don't want to get it. I don't want to get into something that's already made a significant move to the upside. I want to look at WEC here. Okay, so if I'm looking for some type of safety play and I want to, get in on like the breakout, and Marquise, I believe AEP was actually on the report. I have to double check that. But here's CMS. Okay, so CMS has clear resistance at 52, broke out of 52 yesterday, continued on to 53. Maybe it's already made a little bit of run. Maybe you don't want to chase that one, but that was a clear breakout candidate yesterday, no doubt about that. DTE here. Okay, now unlike the other ones, Tim, DTE has not broken out yet, and
Correct.
so for me, you're looking at a potential trigger right above 121. You can put an enter to buy right above 21, a buy stop limit right above 21. If it breaks out, continues, you get into it on that one. So, maybe you don't chase CMS. Maybe you don't chase Duke Energy. Maybe you don't chase AEE. Maybe you look for something that is setting up for a potential breakout right now. And that would be something like a DTE. NRG here, same type of thing here. Good, really good trend, really good pattern here, real clear area of resistance. And look what's happening today. It tested the breakout, couldn't do it. Literally almost kissed it to the number at 40.38. Couldn't break that. That to me is a very easy, if you're looking for a utility play and you're saying, okay, I want to get on a breakout here, that's very clear. You put an order above 40.38, buy stop limit using your rules, right? Mine's 10% of the ATR above that high, bracket that in with another 10% of the ATR to create a buy stop limit, put a stop loss under $40. That's cheap risk. You don't put a target order. You let the utility run. You let it play. You let the momentum play with the utilities. And isn't it amazing that on a day like today, the best trades that are setting up for swing trades, not investments, not position trades, Tim, but for swing trades are utility stocks. It's amazing. PNW, another one here, PNW. Okay, look at PNW. Nice little high base situation here. We've talked about it before. Once something gets overextended, either it's going to retrace back down into that rising now moving average, or it's going to consolidate. And a lot of times that 20-day moving average will catch up to the consolidation, and then it breaks out and runs. And that's what's happened on Pinnacle West right now. And
now,
then
real quick on that one,
that
was, I think, a really interesting one that we can learn something from, because Pinnacle West was on the options report, and we had the entry trigger at 90, Matt.
Right above 90.
That high base ascending triangle, which is why, by the way, guys, you got to get in there on Sunday or Monday morning and watch those reports. They're going to be updated throughout the week with triggers. You've got to do that manually, but you might miss some of those.
That's up to the trader, right? Because it's not our job to tell people what to trade, when to trade, and how to trade it. It's their job to apply their trading system.
Sure.
But in terms of this, yes, you have to, as a trader, you have to update your triggers. Stop losses don't need to be updated that much. Targets don't need to be updated that much. But based on what the stock is doing, you absolutely have to update your triggers throughout the week.
So have you missed this trigger here?
I don't think so.
Your trigger was 90. You're $1.24 above the trigger. The ATR is 141. So you're less than one ATR above the trigger.
Your RSI is still at 60. It's crossing, moving up. I don't think you've missed it. You take Duke for a second, right? Okay, so you're looking at Duke here. So Duke broke out the same way it broke out. PNW broke out yesterday, and Tim closed above 90. Same thing with Duke, right?
Mm-hmm.
So for me, it was easy to say, okay, Duke had already ran and it's too far. And you might say, well, Matt, Duke triggered yesterday, and it's doing the same thing PNW is doing today. Well, no, there are different patterns going into that breakout. On this one, you had a continuation pattern, and you just simply broke through a rising wedge, right? But look what RSI was doing on that breakout on Duke. So on the breakout, you're approaching overextended on the breakout. You look at PNW here. You look at PNW, there's a different pattern. This is a high base pattern, right? Simple consolidation in a high base type situation. You have the RSI now on that breakout. Look at the cross back up above. Look at the going above 60. You still have tremendous room before it gets overvalued in the short term. You can't say that on Duke because the RSI is already at 72 on the breakout. So Duke's already ran a little bit and was already running a little stronger before PNW broke out. So there is a subtle difference on those two when it comes to, well, has it ran too much, right? Matt constantly says, don't chase the dragon. the Dragons Duke. It's already ran too much. It's overextended after the 2 days after the breakout, and we could see some consolidation there versus PNW that is breaking out very similar to Duke Energy, but it's not overvalued yet in the short term because the pattern going into it was a little bit different than on Duke Energy.
You know, on the upside, obviously, utilities was that one green area on the heat map today. I'm watching and scanning some stuff in tech as well. You know, the most bearish thing we had on the scoreboard newsletter this week, Matt, was communications. We were very, very bearish on, which is your Twitter, Facebook type of thing. You know, you look at the XLC, that's a downtrend, that's a bear pivot. You're selling off aggressively.
Well, let's look at a couple of those components here, Tim.
Yep.
Here's Facebook. We talked about and we said this yesterday. The upward movement in price yesterday gave us a better trigger if it does come back down, correct?
Mm-hmm.
Okay, a close back under 140 with an entry underneath the low of the previous day, that's a trigger.
Correct. Yeah, correct. And one thing that's not a bad idea to do is to build a watch list off of these different sector spiders. A lot of the XLs, Matt, XL, K, Y, I, F, E, the ones that we use when we're analyzing the S&P 500, they actually are all S&P 500 components. So, you know, they're larger companies in general, right? Everything in XLC, like Facebook, Twitter's in XLC as well. Yeah. You know, Google's in XLC as well.
Let's stay on Facebook real quick. If the trigger's updated on Facebook to now a close under 140, not a test under 140, but a close under 140, and then a short underneath the previous underneath today's candle, right? That would be the kind of the trigger on Facebook. The stop loss here would also have to adjust based on the report, Tim, because on the report, sometimes we have to project future that we don't know, right? So Facebook here is as it is approaching 140. We don't know if it's going to pivot at 140, if it's going to pivot here as it gets in between those two depressing moving averages. So now, if it did trigger underneath 140 2 days ago, for example, the stop loss would have been above 140. But since Monday happened, and now you have a clear intraday resistance here at right at 145. So for me, the stop loss, instead of putting the stop loss above 140, you have to get that stop loss above the highs there. To me, at least 144.
I would agree with that. You know, it's an interesting pattern there with Facebook. I've been bearish on Facebook for a very, very long time. Just the chart, you know, and obviously the company fundamental. I do, yes. And I don't hate some of the companies.
Official. Tackle Trading, Trading Justice, and the Justice Brothers can't stand Facebook.
Yeah, it's official. I think the 800 times we've said it has made it official.
You're gonna get us booted off.
Facebook has.
They're going to censor us for hate because we're hating their company.
Okay. You want me to test it? I'm going on Tackle Trading's Facebook channel after this, and I'm saying I hate Facebook. We'll see if Facebook can catch it on that one because we're saying on Google here. But in terms of this, Tim, Facebook is now into the Goldman Sachs CMG level of I can't stand this company.
Well, it's the top company in excess.
I don't care. I will not invest in this company. I will not buy this company in any capacity, and I will enjoy shorting this company.
We get it, brother. Breathe.
No, MySpace. That's all I'm going to say is
we release the monster.
bring back MySpace.
Well, you know, I will say this, though. There's a learning lesson here. You got to be cautious about trading with opinion, though. You know, obviously, if you're an emotion, I know you are fine.
I'm a cutthroat market assassin, robotic individual who doesn't give a shit about anything.
All right.
So yes, I'm not going to short Facebook because I hate Facebook. I'm going to short Facebook with the trigger under 140. I'm going to put a stop loss above 144, and I'm targeting 130 by 120.
You know, that's a good point to make right there, is the fact that I know Matt, in addition to hating Facebook, hates Goldman Sachs, but you don't always have a short on Goldman Sachs.
Absolutely not.
You make the joke all the time about when you short Disney, when your wife and kids go there, but you don't always have a short on Disney. Yeah, that's true. I mean,
I just like to make fun of Disney because my wife spends a fortune at Disney. But no, I don't hate Disney.
Yeah, the main point just being that, don't be emotional in it. If you love or hate a company, doesn't matter. Trade what you see.
Everybody's got love and everybody's got hate in their hearts for all things publicly traded companies. I'm no different than anybody else. Some people might love Goldman Sachs. I call those people the devil. You know, but it is what it is. But no, I'm not going to short something just because I don't like the company. I'm going to wait for the appropriate trigger.
Yeah. Let's keep breaking down the communication stocks. You game? I'm going to rapid fire through them. You tell me if any of them are
Yes,
better than the
I agree
Facebook
with Jim.
pattern.
By the way, I will enjoy shorting Facebook many times over the next year because I don't think this trend's going to change.
I agree with that. Let's see if any of them are better than Facebook. So we'll play a little game here, Matt. Is the pattern better than that Facebook chart, right? Because the whole premise here on Delta Tuesday was to start at the top of an idea. Okay. So give me XLC again, real quick, right? So we started at the top. Here's a sector. We went to the scoreboard. Cody had the newsletter this week. We had XLC rated aggressively bearish. You can see it in the chart, right? It's in a downtrend, lower pivot low, lower pivot high, 2 red candles in a row, obviously bearish. Now, here are the top 10 holdings in XLC. We've already looked at Facebook. Give me Facebook one quick time, not just a quick glance at the chart here, rapid fire style.
All right, I was just commenting in chat with some of the crew.
Okay. Downtrend, we see the pattern. Give me Google. Google is the number one weighting in the XLC, by the way, because they have Google Class A and Class C. When you combine them together, that's bigger than Facebook. Obviously down 3.5% today. Now, is that chart better than the Facebook chart?
Google?
Yep.
Yeah, of course it is.
Okay. Better in a bullish way, not better in a bearish way. If you're just looking for a trade in the direction of
it's neutral. Facebook's bearish, Google's neutral.
This one's neutral until it breaks 1,000. Give me Verizon, 5% of the XLC holding, VZ.
The only thing holding it up.
It's bullish, right? You're not going to play against the trend on Verizon.
No. There's no short here on Verizon, especially in this market environment. But I am seeing some subtle changes in Verizon, which could impact XLC to the negative.
I agree with that. Give me Disney. Walt Disney, 5% weighting of the XLC, neutral.
Yeah, that's neutral.
Yep. Comcast, CMCSA.
I hate stocks with 5 letters.
Did they change it? Is it CMC? What is Comcast symbol now?
CMCSA.
Yeah, that's what I thought. Uptrend, red candle coming off of a pivot, but not in a downtrend, right?
No.
Okay.
Worst case neutral.
AT&T.
Bearish.
Bearish to neutral.
Bearish to neutral.
Yeah. Netflix.
Bearish.
Yeah.
Netflix might have the best trigger in the market.
You could debate this one and Facebook.
Netflix has a better trigger than, and we talked about Netflix yesterday, but Netflix has a better trigger stop placement than Facebook does.
And Fox A, last one out of the top 10. These are all the XLC top 10 holdings. FOXA. FOXA. Yeah.
I was going to say FXA is Australian dollar.
And they've been going through merger and acquisition stuff for a long time. So here's the thing. I'm looking at all this kind of stuff, Matt. I went through all the different components of this new sector, the XLC. It's relatively new from that perspective. And you see some that are very much in line with the trend of the XLC. You see a few that are actually counter trend, like Verizon is in an uptrend, but also has some weakness in that chart. I had a little consolidation, lower pivot high. But clearly, Facebook and Netflix were the ones that fit the overall sector match, right?
Mm-hmm.
See, when you're talking top-down analysis, I don't really care whether a trader trades one stock or another. I want to make sure that a trader is logical in their approach to the market, okay? Here on Delta Tuesday, if the sector's bearish, find something bearish in it. If the sector is bullish like utilities, find something bullish in it. Do not make this stuff complicated. Keep your position sizing small, trust your trading plan, build a trading plan, execute your trading plan, and trade what the market is giving you. That's trading 101, right? Top-down analysis. I love the idea Cody brought to the table here today. And obviously, that's one way that you can use that newsletter and all of the sector rankings that we put so much time into building over as coaches over at Tackle Trading on a weekly basis.
Yeah, well said.
Yep. All right. Well, we are at that time, brother. The yield curve is inverting. The market is selling. Give me one last look at.
Yeah, let's take a look.
We got to get one last update. Intraday, trying to hold that 2,700.
For anybody who just knows how to buy things, watch out.
Yeah, obviously.
I mean, that goes without saying here.
Yeah.
But Tim, I do want to make one quick note. There's nothing today that's going to happen to switch this market from neutral to bullish to bearish. Now, because the market's at resistance, usually I carry a slightly bearish delta. And when the market is at support, I'll carry a slightly bullish delta until that changes.
Yeah, I agree with that. Beta weight your delta, make sure it's in line with your market expectations. Get good at this stuff, guys. Keep coming back to the halftime report. We'll be here each and every day.
We will. And that's the thing, guys. These market conditions are not fun for anybody. They aren't. They're not fun for any trader out there. Even the traders that are doing really, really well in this environment, it's still a stressful environment. Would you agree with that, T?
Oh yeah, it's definitely it's a tough environment.
Bulls to bears to cash flow, people. We all hate the volatility of the news cycle, the whipsaw impacts, and all that jazz. Be conservative, right? Be conservative. Lower position sizes. Update your triggers. Be cautious. Be with us. And when this market breaks out or breaks down, we'll go with you with it.
We're down 3% across many of the indexes here today, Matt, and it doesn't surprise anybody. That tells you the nature of the change in the market the last 2 or 3 months. 3 years ago, if you had a 3% down day, people would have been screaming and calling for the next bear market. Now we're just kind of getting used to this crazy volatile movement. We're in the middle of that range. I love the analysis. Great job by you today. Yep. Cody, good job on the prep. Halftime crew, thanks for being here.
Good job, crew. Like
the coaches show tonight, by the way. Come and join us for all of that.
Right?
Yeah, I think so. Yeah.
I'm making an appearance on the Coaches Show later tonight, so make sure you guys come out there. Still trying to figure out exactly how we're going to approach that Coaches Show today, but Noah and I will sit down and get a good game plan for you guys. I'm sure we'll be doing some great things in the Coaches Show tonight. So for the pro members, I'll see you guys over in the Coaches Show later tonight.
Peace out.